I won't be surprised if it goes anywhere between 200 and a million. It could even pop over a million for a little bit. But I think 475K for me is kind of the most likely target. I also have Q4 of 2025 as my target. It could extend beyond that based on what I'm seeing, but I'm kind of just sticking with these are the predictions I've made for the last 2 years, and I'm sticking with that 475K in Q4 of 2025. And then the other point, what I wanted to say is these people that are calling for we've already hit our peak and that we're going to roll over. There are a lot of people, and for whatever reason, they're Gen X economists and traders who, and I'm Gen X, so I can say this, I'm right in the middle of Gen X. They are freaking people out saying we are at this historical peak like 1929 or 1999, and we are at the cusp of a massive, massive recession, and we're going to have a deflationary bust, and stocks and Bitcoin are going to absolutely crash and get demolished, and so is oil. Like literally worse than 1929. There are multiple people talking about this. I think they're wrong. I look at their, I study macro. I run a macro hedge fund. It's a multi-strategy macro fund. I couldn't disagree more. We're all looking at the same data. I think that we are just at the early stages of a new economic cycle. It's actually grinding, and we can get into all this if we want to, or we don't have to talk about any of this. But I think we're early stages. And that the economy is going to be actually quite good throughout 2025. It's leaving me very optimistic. So coming full circle to what you're talking about, I am optimistic like you are. I think that 2025 is going to be a good year. As far as the price is concerned, I just like to remind people, even when we're in a bull market, and I officially declared that I switched from bull crab to full bull. I said around Michael Jackson's birthday, so the end of August of 2024. That's when I switched over, and I haven't looked back since then. I think the price was like 53,000 or something back at the time. During bull markets, it's super normal to have 20 to 30% pullbacks. That's just part of the game. So if we do have these big run ups, what I like to tell people is just imagine if the price was 30% lower a week from today, how would you feel? So keep those kind of things in mind. If we go up to, say, whatever, 120,000 here in the next couple of weeks, which is kind of my short-term target for the end of December. I wouldn't be surprised if we drop down to like maybe 85 or 80,000 or even 75,000 or so. And then we kind of start taking off again. So just kind of prepare yourself mentally for those pullbacks. It doesn't mean it's over. It doesn't mean the naysayers are right. The recessionistas weren't correct. It's just a normal, typical bull market pullback.
Absolutely. And as long as you've been in Bitcoin, there's something about the human brain and human nature that's like, it's very difficult. It's like when number goes up, you want a FOMO. When number goes down, you're like, oh my God, and then eventually kind of reaches that capitulation phase. Now, what's really interesting to me, Dr. Ross, is what you were just talking about. You're the only person that agrees with the China mining ban, because I've been saying that for like a couple of years. And I've been getting but like you see the hash rate and the price, and it's a direct correlation. Like you see the hash rate dropping, the price follows 50%. Those miners had to sell. Then the miners have a lot of the Bitcoin. They had to sell to relocate to a more favorable jurisdiction. You see the hash rate recover, price recovers with it, right? And then they had that like the glorious, like trying to make it up. But it seems like it was almost on purpose to take the steam out of it. And in regard to the next cycle, why I believe you're right, and I agree with you, is that Bitcoin tends to do the exact opposite of what everyone expects. And the general consensus this cycle is 150K, 200K. That is what I'm seeing everywhere. The power law, and again, Giovanni's a great guy. Fred Krueger, great. I love their work, right? But that is the general consensus on Bitcoin Twitter right now. And as you said, Bitcoin does the exact opposite of what everyone expects, right? So yes, I would be extremely surprised if we only did 100%, because 100% takes us at 200 to 200K next year. Mm-hmm. So I'd be extremely surprised. And if you're right about the 120 by the end of the year, and I'm feeling that way as well, it's less than 100% just to get to 200K. So. Right. And if you look at Bitcoin's historical patterns, it's never broken this, but for some reason people always think it's sometime is different, which is the year after the halving year, is the parabola year. And at this time, it's like, no, that can't happen. And the reason that I think that is because of everyone has PTSD from 2021. And if people forgot what a real party was in 2017. It's been 7 years, almost 8 years since we've had that level of excitement, that level of euphoria. So yeah, I completely agree with you. And it's interesting because that's not the general consensus. A lot of people are saying that's the opposite. Now, you said something there was really interesting, and I want to dive deep into that, which is the general kind of macro trends that you're seeing. And you're seeing that they're very favorable heading into 2025. That's something else. This is the first time I'm hearing that type of stuff. So what are you seeing that everyone else isn't seeing? What are you seeing that interests you?
Man, I just look at so much data, and all of the data I look at is great. So first of all, one thing is not good. U.S. manufacturing has been in the dumps. It's been in contraction or recession mode, meaning a level below 50 on the ISM. It's these scales that we use. If it's above 50, it's considered it's increasing, it's advancing. If it's below 50, it's in a contraction or it's in a recession. So U.S. manufacturing has been stuck in this weak sauce zone for about 2 to 2.5 years, and it's rough. So if you're in the manufacturing industry in America, things have been tough. I grant that to everybody. So, but why does it not matter that much? Because the services sector is such a huge part of the American GDP. So the economy in America is run on the services sector, not manufacturing. It's like a 2-to-1 ratio, even a little bit more than a 2-to-1 ratio. So, not that I feel bad for people who are in these sectors, but it doesn't drive the economy. What drives the economy is services. Services is killing it. With the numbers just came out again this morning, and I don't have them on me, but I think it was 58 or 59 or so. So expansion, they're just expanding like crazy, doing very well. And overall, the composite index is getting pulled up very solidly because of services. So manufacturing is weak, but it's only manufacturing. Housing, which everybody talks about, that and I was one of them in 2022. I thought the housing market was going to collapse because of what was happening with rates and the economy slowing down and all this kind of stuff. I thought in 2022 that we were headed into a recession, and I do believe that it's fiscal spending that saved us from going into a major recession at the time. Housing, people continue to say looks ugly. It is weak, but it's starting to improve. Okay, so that's a major driver of the economy. You can look at new orders, which are forward-looking indicators. So if you talk to people who own businesses, are orders in the future for the coming 3 to 6 months, are they looking up or are they down or are they about flat? Almost all of those indices are kind of off the charts going up. So what does that mean? That means that looking into the future, forward indicators, businesses should start to improve. I think we'll see manufacturing, especially with the new Trump administration coming in, who's very pro-manufacturing, very pro-bring it back to the United States, which I think is awesome. I think 3 to 6 months from now, U.S. manufacturing will be doing extremely well, and we'll be looking back at like, oh, what a relief! Can you believe we thought we were going into recession? Now look at how strong the economy looks today. Profits, people are talking about. So I follow a lot of value investors. I used to kind of live in the value investing community. They're talking about these very stretched multiples. So the price to earnings ratios, price to sales ratios are kind of getting very high, and they'll show charts about how it looks like 1929, looks like 1999, those kind of things. They're right. But what they're missing once again is that if you have a growing economy, what happens is then those earnings start to increase, the denominator starts to increase, and it shrinks those values. So the companies grow into those expanded valuations. So when I look at all of those things and then multiple other factors, all I see is we have liquidity that's starting to increase again. Global M2, which had been on the decline throughout all of 2022, basically bottomed in Q4 of 2022. It's been going higher. A lot of people come back at me and say, but in the last couple of months, it's been going down. What's happening? Is it over? Have we peaked? It's only because the dollar has been so strong. So we've had a huge burst higher in the dollar basically since I think the end of October or so until now, maybe even the beginning of October, somewhere in that time frame. This exact same thing happened the last time Trump was elected. It creates this strength and this optimism, and the dollar ripped higher to the end of December, early January, peaked, and then rolled over and basically fell all throughout 2017. I expect pretty much the exact same thing to happen, where the dollar quits being the dollar wrecking ball. It rolls over. It kind of decreases throughout the rest of 2017. Why is that important? Because the dollar really affects all other countries. So all other countries who have priced their debt or their goods and services in dollar terms, it hurts them when the dollar is strong. When the dollar weakens, their own currency strengthens. It makes it easier for them to pay back debt. It makes it easier on their economy. They can sell more goods. It's easier for them to run their economies. And it's basically just net good for the world when the dollar is weakening. When economies are doing well, banks start lending. When they lend, they're creating new monetary supply. That increases global M2, and that as the global M2 starts to increase, it finds its way into more further out on the risk curve into stocks, and especially into Bitcoin, which is the great absorber of liquidity. So lots of reasons there, but everything I look at, and I'm not even trying to be snarky about this. I see people talking about, I can't believe we're looking at the same data and you have a negative picture with what's going on. Most of them are valuations based or technicals based, or they're more focused on what's happening outside of the US, because it's true. The EU looks really rough right now. It's very stagflationary. And China looks very stagflationary right now, meaning a stagnant economy, but higher inflation. The U.S., however, is not in that picture. And as the global growth engine, which the United States is, and I expect it to be even more powerfully with this next administration, we are going to lead the world out of this stagflationary condition and into growth again. And that's very bullish for risk assets, and especially for Bitcoin.
Need liquidity without selling your Bitcoin? If you've been in BTC long enough, you've heard of the term HODL and the name Ledn. Ledn has been the go-to specialist in Bitcoin lending for over 6 years. They help clients unlock the liquidity of their BTC, allowing you to HODL while still accessing the wealth of your BTC. They've been battle tested with their focus on transparency, security, and trust, allowing them to build a proven track record of client success and security, helping tens of thousands of clients harness the value of their digital assets with confidence and peace of mind. But don't take it from us. Check out Ledn's Trustpilot or their reviews on social media. And to learn more about what your Bitcoin could do for you, check out ledn.io today. Again, ledn.io.